Sonali, you've been covering this since before even the meme stock thing turned into kind of the issue of 2021. What does it mean that Robinhood is trading down on the first day of trading?
Listen, at $33 now, it's a lot lower than the $38 share IPO price. So, we knew that this retail allocation could be anywhere between 20% to 35%. So where was that calculus last night when the bankers were also talking to institutional investors? And then those retail investors that brought in at $38 a share, how are they feeling now? We know that the people who bought in at that price are already down by many, many millions of dollars, perhaps hundreds of millions of dollars at this point in time. Where it ends the day. We knew it was going to be volatile. We just didn't want it to be this far down. Right.
Emily Chang, you're joining us now from San Francisco, of course, host of Bloomberg Technology, and you just spoke with Vlad Tenev about an hour ago, one of the co-founders and the CEO of Robinhood. How disappointed will they be with this drop?
When you interview a CEO on IPO day, if you ask them if they're disappointed, they're not going to give you the answer that you're expecting to hear. He said it was surreal, and even though it is a more muted debut than we might have expected, this is still, circa $30 billion company. We'll see where it ends up. At the end of the day, for the early investors like Index, for example, who put in $500,000 of seed money, that's now worth $3 billion. So Vlad Tenev told me it was surreal. It's an exciting moment to be here, and he's really focused on the long term now. I mean, the really interesting part of this is that retail allocation that Sonali was just discussing. They said they would allocate 20 to 35% of shares for Robinhood's own customers. That number looks like it's somewhere between 20 and 25%. He's hoping that those investors will be long-term investors. He wouldn't give me a direct answer as to how they actually decided the final number. But of course, we're going to be watching how long those investors hold on to these shares. There's a disclaimer in the Robinhood app that they're supposed to hold on for 30 days. But, how does Robinhood hold them to that? We don't know.
Well, in terms of, how pleased you are with the experience, it's got to hurt, Sonali, to have your IPO fall below the opening price. I mean, you want, I guess, maybe a 20 or 30% pop, at least for the hype. You don't want too much because you're leaving money on the table if it doubles on the first day. But it really doesn't say anything good about the company. It's been a hot year for IPOs. What other companies have had their shares trade below their opening price on the first day?
Well, Didi is like the prime example right now, but there are a lot of external factors for that, as
and that's a month later, right?
Exactly. And so Coinbase also was the one that experienced a lot of volatility. Remember, when it comes to Robinhood, when it comes to Coinbase, there was a real effort here to democratize the IPO process even more. We've seen this trend happening for years now. Go back to Spotify and Slack that were really trying the direct listing model. And some of those companies also earlier on in the newer models faced fluctuating shares, declines even in some cases. But at the end of the day, they were given a pass because they were trying a new thing out. Investors really got to get in a little earlier than they did before. So when you look past all of this, there are going to be a few questions. Is this IPO access model working for Robinhood and therefore its peers that also try this model out? There's also a restriction, Matt, here on flipping, right? Investors technically can sell their shares. Retail investors, there is a bit of a penalty in what they can do in future IPOs for a certain amount of time. But again, if your shares are dropping, then what incentive do you have to care about that restriction when you're watching your shares 8 to 11% lower, depending? There's a really interesting comment made in our top live blog right now from the head of asset allocation at Pacific Life, which says without any bids, there's no floor besides what the underwriters are willing to do. So you have to imagine Goldman.
Well, zero's a good floor.
Zero's certainly a floor.
Can't go below that.
Can't go below zero.
Emily, what about this flipping issue? I mean, Sonali points out there are some restrictions, not like the restrictions they had on selling your GameStop shares at one point, even though you could buy them. There's not a lot of love for Robinhood when they make moves like that. Is that part, you think, of why we don't get a pop on the first day?
So I think it's a little bit different than the restrictions that were implemented during the GameStop mania, where they put restrictions on buying more GameStop shares. The way it works is, Robinhood has this disclaimer: you're supposed to hold the shares for 30 days. If you drop them or dump them before that, you won't be allowed to participate in future IPOs for a certain period of time. The performance right now is reminding me of Uber, and I'll never forget being on the floor of the New York Stock Exchange with Dara Khosrowshahi, and the stock had just opened below the opening price, and there was kind of a moment of shock and disbelief there. No one had expected Uber to underperform so badly, and it definitely took a long time for the company to get back to that opening price, and now certainly we're seeing it beyond that. Does it have to do with this retail allocation? We don't know. Of course, as you mentioned, sentiment out there, there's a lot of negative sentiment out there. I see in my replies whenever I interview Vlad Tenev, people are still angry about what happened in January. That said, Vlad Tenev, BaijuBot from the very beginning, said they wanted to shake up the traditional IPO process, and part of that was this retail allocation, which at 20 to 25% is still on the lower end of the range. But compare that to a typical amount that a company allocates for its own customers. It's normally more like 1 to 2% if it happens at all. So I asked Vlad Tenev about that. I want to roll a clip of what he had to say, Matt, so take a listen.
We certainly are proud to have one of the largest retail allocations ever. And the way that we think about it is it's a long-term focused company, and we're making decisions and making big bets with the long-term interest of the business in mind.
We don't know if that big bet is going to pay off, but of course he's hoping that these investors stick around for the long haul.
Yeah, I wonder what this valuation says about the business, Sonali. In terms of price to sales, it must look like a bargain compared to a lot of the other businesses out there, right?
No,
You've got some.
It's much more expensive.
Oh, you're comparing it directly to something like what, E-Trade?
E-Trade or even an Interactive Brokers. But to your point, do you want to compare it to Coinbase? Because when you're listening to their own investors ask about it, they're asking Robinhood to compete more directly with Coinbase, right? So again, tech company valuations or online brokerage valuations, you decide, right?
Yeah, well, I mean, to me, even though it's a brokerage business, it's a financial business, Vlad Tenev isn't licensed by FINRA. I mean, I think of this more as kind of almost a TikTok or a Snap, because it's just something that you do in the bar for fun. You're trading options. Maybe that's not the customer that they want to go after. What about the underwriters for this offering? I mean, who was involved? Who lost out? Who's maybe happy now that they didn't get involved?
It's a great question, because this was led by Goldman Sachs and JP Morgan, again, who you have to be imagining working overtime right now trying to figure out that floor, who can be taking up this buying pressure. And remember, Morgan Stanley was the big blaring name that was left out of this IPO underwriting process. There were many, many names on this, but Goldman Sachs, JP Morgan, and Morgan Stanley compete very heavily in these tech listings. Morgan Stanley in particular has their E-Trade business, which is a competitor, as we know, to Robinhood. With that said, all these fintechs is a huge area for technology investment right now, for IPOs, for SPAC deals. And so these three banks are competing very heavily on that front. There's a third element of this where these three banks are also trying to change the IPO model, right? Those direct listings and other forms of going public that keep them on top as more underwriters get squeezed out of the process, as new underwriters like SoFi, like Robinhood start to come into the market. Remember, in 5 to 10 years from now, the business of IPOs will be extraordinarily different, both by demand of those retail investors and the VCs that own these companies.